Hey, Antonio, welcome.
Hey, thanks.
Good. How are you? Welcome. You are the last presentation of the evening, and clearly one of the most anticipated presentations. So I want to make sure you get the most time that you can get. So feel free to go over a little bit. So you're supposed to go to 6 o'clock Eastern. You can go over in 5 or 10 minutes if you need to. So you can call back some of the time here. But I want you to tell us a little bit about yourself first, and then how you're engaged with dYdX, and then what is dYdX, and then get into your presentation, which is basically trading on L2, layer 2. I'm assuming you have a deck, and with your presentation, there is an icon on the bottom with an up arrow. You can use that to share your slides.
Cool, sounds great. Well, first of all, I'll give an introduction to myself. So, hi guys, I'm Antonio Juliano, the founder and CEO of dYdX. Kind of got into the space back in 2015 when I got my first job out of college at Coinbase, where I was a software engineer. I worked there until 2016, had a brief stint at Uber, and then kind of left to start my own thing, which is dYdX back in 2017. So, yes, we've been around a while now in terms of DeFi time, at least since mid-2017. And then the main thing I'll be talking about today, as you mentioned, is kind of our new layer 2 product, and giving a demo of that as well after walking through a deck that I have. Cool, so I'll go ahead and bring up my deck. Okay, so dYdX just recently launched our layer 2 product. So this was actually just recently launched last week, actually, in private alpha on mainnet. So this is currently live and running on real Ethereum, and we launched this in partnership with Starkware, and kind of going to be talking through what the product is, and then the decisions that kind of led to some of the technical decisions that we made, or the factors there, and what really drove us to move to layer 2. So first, a quick overview of what dYdX is. dYdX has built 3 main things so far. So we started out with just building a margin protocol. So we launched this in late 2019. And this is basically a protocol that's functionally pretty similar to the way that other pooled lending protocols work. Things like Aave, things like Compound. You can borrow and lend in a very similar way to those. There's a dynamic interest rate. But kind of the main thing we added on top was, what we think was a really superior product specifically targeted at margin trading. Margin trading is just leverage trading by using borrowing and lending to kind of increase the amount of capital that you can trade with. So that's been live for a while now and continues to be live on layer 1. The second thing that we launched is perpetuals on layer 1, and we launched this in summer of last year. Perpetuals, for those who aren't aware, are a synthetic contract, which basically means that when you're trading a perpetual, say you're trading a Bitcoin perpetual, there's no actual Bitcoin under the hood. There's just a synthetic contract that, based on a bunch of different mechanisms, has its price tethered to the underlying asset, which in this case is Bitcoin, Ethereum, or whatever else you might want to trade. Perpetuals have become quite literally the biggest product in crypto by quite a lot. In terms of volume, they trade more on average than the entire rest of the crypto market put together. And that's something that just happened in the past year. So they're growing pretty fast as well. Normally in traditional financial markets, you see the derivatives markets trading roughly like 5 to 10x the volume of the underlying spot market. And like I said, that just kind of happened for the first time in crypto, where the derivatives volume surpassed all of the spot trading volume put together and continues to grow at a rapid pace. So that's really what drove us to launch the perpetual product. It's the biggest market in crypto, and something I think DeFi is really primed to be able to disrupt. And the thing that we've been working on for the past 6 months or so is another product for perpetuals that's built on top of layer 2. And this is powered by Starkware, and I'll give a lot more detail on that in just a moment. In addition to moving this from layer 1 to layer 2, we really rebuilt the entire product from the ground up. So, completely new user interface, completely new backend, completely new protocol. And I'll walk through it in just a moment here. But we're really excited about this product launch. Couple of statistics on our traction so far. So there's been 5.5 billion cumulative trading volume on dYdX so far. And that's of course all on layer 1 because we just launched the layer 2 thing last week. We've originated over $17 billion in loans and had over 55,000 unique users try out and use the platform. So pretty good traction. I think there is still quite a lot of room for derivatives and synthetics to grow in DeFi, especially kind of compared to some of the spot markets. Normally the way I think that kind of markets evolve is first you start with spot markets, then kind of margin markets are built after that, and then kind of synthetic and derivatives markets really dominate a little while after that. And that's what I'm excited to see in the next year or two in DeFi. Hopefully with dYdX leading the way there. So our perpetuals on layer 1 were launched in May of 2020. We have 3 markets there, so Bitcoin, Ether, and Link, and they offered up to 10x leverage. There were a couple different problems we kind of ran into with this product. The first was gas costs, and to anybody that's used DeFi before, this should come as no surprise. Gas costs have just gotten absolutely ridiculous on Ethereum recently. Normally, it's costing our users about $100 plus in fees per trade right now to execute a single trade on the platform. And this is just obviously really unsustainable. Like not that many people are going to use an exchange where you have to pay $100, sometimes up to $1,000 plus per trade to make trades. The other thing that was really challenging about building on layer 1 is there were a lot of limitations around what we could offer with the user experience. I think these are kind of the types of things that users have become used to in DeFi, but I think with our new layer 2 product, a lot of the game has basically changed. So these are things like being able to, like how long do you have to wait before a transaction is mined on the blockchain? For example, anybody who's used DeFi before, like made a trade on Nos or Uniswap, is used to, say, making a trade, then waiting for your transaction to mine for like a minute or so and seeing a spinner on the website and not really knowing what happened until then. I'll demo this in just a moment, of course, but with our new product, it's completely instant. So instant trade finality. The product really feels like you're using a centralized exchange, and that's what we were going for, but has all the really great properties of building in DeFi and being non-custodial. So the solution was for us to move to layer 2. And maybe the first thing I'll talk about is just a bunch of the advantages and kind of improvements for the product that we get from moving to Starkware. So the first thing is zero gas costs for traders. So this is obviously the main selling point of our layer 2 product. No more do you have to pay exorbitant fees to use DeFi. You can just deposit your funds, and after that, you'll be able to trade with fees that are really in line with what users and traders are used to on centralized exchanges. And I think that right there is really exciting. But it doesn't stop there. So another really critical thing that we are supporting on the new product is reduced fees or reduced minimum trade sizes, basically. So this was another limitation that we had to make on the layer 1 product due to gas costs, but currently the minimum trade size on layer 1, I believe, is 1 Ethereum, so over $1,000 that you have to make per trade, whereas on layer 2, again, because of the scalability, this is no longer a consideration and users can trade with much more reasonable minimum trade sizes. The next thing is a little bit more sophisticated, but is actually critically important, and that's cross-margining. Basically, what this means is that now users can just deposit once to their dYdX account and can use a single pool of collateral to trade any type of market or any asset that they want to on the platform. So for example, you could just deposit, say, 100 USDC to dYdX and immediately start trading on all 3 of the Bitcoin, ETH, and Link markets. And this is really different than what we had on our layer 1 product. So for our layer 1 product, it was what's known as isolated margin. And basically what that means is that for every new market you wanted to trade on, you had to put down collateral separately for that market. So this was really capital inefficient for traders because you just have to put down multiples times more capital. And even worse, this was especially inefficient for our market makers. So imagine you're a market maker on dYdX, and dYdX only supports isolated margin. And say dYdX wants to launch like 50 markets to be competitive in the exchange landscape. If you're a market maker on dYdX and dYdX only supports isolated margin, you have to put down collateral 50 times for every one of those 50 markets to start market making and start quoting on every different market. And obviously that's kind of ridiculous and it's extremely capital inefficient, but this was the main thing that was holding us back from just launching a ton of new markets on the platform. So this cross margining is really going to unlock us just launching a ton new markets. Our target is to hit 50 new markets on dYdX by the end of 2021. And we're going to start rolling them out just really soon after we do the public launch. So that's something I think is pretty exciting as well. The next kind of really important piece is being able to trade with higher leverage. So higher leverage is really unlocked by just an order of magnitude improvement in the performance of our price oracles. So the way price oracles are going to work on layer 2 for us is they're going to be provided by the exact same providers we know and love from layer 1. So they're currently being provided on layer 2 by Chainlink and then MakerDAO's oracle systems. So we're taking the exact same prices, the exact same security, everything like that from layer 1. But the thing that we're getting is just vastly improved performance. One of the big problems we ran into on layer 1 with price oracles is the latency. And basically what that means is like after the price of an asset changes, how long does it take that price change to be reflected on chain? And on layer 1 Ethereum, especially when there's big price crashes, which is when you need the prices to update the fastest, it took them like 5 to 10, sometimes up to 15 minutes to kind of get their transactions mined to update the prices. So there was quite a lot of lag in our oracle prices. And if you're running a leveraged exchange, this is really tough, right? Because basically the thing you have to think about when you're setting your maximum leverage is what's the maximum amount or that the assets on my exchange can change in kind of the lag that it takes for the price change to be reflected in the actual oracle prices. And that used to be like 5 to 10 to upwards of like 15 minutes sometimes. But now, because we're putting the price oracles on layer 2, we can get these price oracles reflected on our system in single-digit seconds, which is just a massive improvement. So now if the price changes, it'll be reflected on dYdX just almost immediately or almost as fast as it will be on centralized exchanges. And this is what's going to unlock us just completely raising like the maximum leverage that we're able to offer. And we're starting out with 25x max leverage. And this is a really big deal to traders, and especially a really big deal to traders of perpetuals. Binary I think is also really important to traders, is just a really big improvement in terms of privacy. So basically, everybody's probably used to layer 1 DeFi where everything is public, at least like pseudo-anonymous, where everything can be tied back to an address. But now, because we're partnering with Starkware and using zero-knowledge Stark proofs, the actual trades are not reflected on the blockchain anymore. Only the account balances are reflected on the blockchain. So, the public can't see what any given address's trading strategy is. And this is something that's really important to more serious traders. So with kind of the technical landscape and maybe I'll talk a little bit about kind of our decision to partner with Starkware and why we went with them over some of the alternatives that are out there. But first, let me maybe talk at a really high level about how Starkware works and how dYdX's product on Starkware works. So Starkware is basically the leader in terms of in the scaling solution that's known as zero-knowledge rollups, or specifically Stark rollups. And basically how these work at a really high level is you can take an arbitrary amount of data. So in our case, that may be, say, all the trades we want to execute on dYdX in a given time frame. And we can take this data, all of these trades that we want to execute, and then we can run what's called a zero-knowledge proof on them. And basically what the zero-knowledge proof does is it translates this arbitrary amount of trades that we want to settle, and it converts it into this constant size data object. Constant size means that it doesn't matter how many trades are in this batch that we want to submit. It could be 1, could be 1,000, could be more. You always get the same constant size data object, and that's where all the scalability comes from. And this constant size data object is just what's known as the zero-knowledge proof or the Stark proof. and you can submit that proof to the blockchain. The smart contract knows how to verify effectively like the cryptography that goes into it, and then the state on the blockchain can be immediately updated based on that new batch of trades. So some other things that we considered in terms of when we were thinking about what to go with in terms of our layer 2 solution, obviously we considered zero knowledge rollups. The main other things were optimism and kind of optimistic rollups. And then we also considered other layer 1 chains. So in terms of why not other layer 1 chains, I'd say at a high level, a lot of them are really exciting, but not quite there yet in terms of the ecosystem that's built up around them. So for example, like if we move to, a different layer 1 chain, our users would start having to use totally different wallets. They'd have to use cross-chain solutions to get their assets over there. Potentially a lot of the developer experience wouldn't be as good for us, things like that. And that's just a real blocker in terms of being able to continue to provide a really high quality product to our users with the wallets that they're already using. In terms of why zero knowledge rollups over optimistic rollups, so for this one, both of them basically settle on Ethereum. So for both, you can continue to use the exact same wallets that you're already using. Some limitations that we found for optimistic rollups, especially for us as an exchange, were basically that the withdrawal time is really, really long. At a really high level, the way optimistic rollups work is the kind of prover can submit like any state at all to the blockchain, even an invalid state, and then the system basically relies on kind of third parties watching the blockchain and submitting fraud proofs. And that usually requires that there be a week kind of delay for withdrawals to allow for these fraud proofs to happen. And if you're an exchange, that's a really big product limitation, right? Like who's going to use an exchange where you have to wait a week to withdraw? And obviously there are some workarounds for this. So the main workarounds for this are having a centralized liquidity provider, which can basically front the withdrawals, front the capital for the withdrawals, and then will kind of be reimbursed later, like a week later, once the batches settle. But kind of the issue with this is that you have to have a ton of capital to be this liquidity provider. So, suppose we wanted to do that at dYdX, we'd have to have capital proportional to an entire week's worth of withdrawals to be able to, have our users not wait a week for a withdrawal. Whereas with optimistic rollups, because we can submit, basically the batches are instantly finalized once they're submitted on chain, because the smart contract knows how to validate the proof. Basically, we can have users withdraw pretty much instantly. So that was kind of the biggest consideration in terms of why Starkware over optimistic rollups. There are also some other considerations in terms of Starkware and zero knowledge rollups. We feel they have a higher level of decentralization and also a higher level, or maybe at least a more proven level of security. In terms of Starkware has been running on production now with another decentralized exchange, Diversify, for over a year now. And that's just kind of a level of production readiness that we haven't seen quite yet from some of the other layer 2 solutions. Cool, so that's basically it. Let me jump over to the good stuff now in terms of a demo of the product. I'm just gonna switch tabs here. Okay, so this is the real product. This is what's currently live on mainnet right now. You can see at a high level, looks like an exchange that you would be used to, but kind of the real killer feature here, and the kind of best way to think about dYdX is this line right here, this line that says buying power. So basically what buying power is the amount I can buy on the platform. But the cool thing about it is that buying power is based off of leverage. So kind of the killer feature of dYdX is that you can come to the exchange with, say, $100, and then based on the leverage that you're willing to use, you can buy up to basically immediately $2,500 worth of a Bitcoin synthetic or Ethereum synthetic or whatever you want to buy there. So you can see on the platform here, I have a position open right now. So I have been using this account. Obviously, you can go long or short. Long just means you make money when the price goes up. Short means you make money when the price goes down. And that's basically it. So let's go ahead and maybe add to my position here. So on the Bitcoin market, And the first thing that I want to call out here, and just pay attention to this as I kind of make this trade, is how fast this trade settles. So click to make the trade. That's it. It's already settled. It really feels immediate. It really feels like you're using a centralized exchange. It kind of feels magic. But the trade is already finalized. The position immediately updates. You get that notification in the top right. You can see the fill, the order that just happened, and it just vastly improved trading experience in my opinion. You can see things like your leverage on the position. You can see things like your P&L. We support a bunch of more advanced order types. So it's not just market orders. We support limit orders as well. So maybe I'll go ahead and just place a resting limit order on the order book. Oops. Just place like a resting sell. So you can go and see this is my order here. It's immediately reflected on the order book. Can go ahead and like cancel that order whenever I want to. So there, it's already gone. And that's kind of the advantage we get of basically having like the order book and kind of the order matching in this off-chain way, is that it's really performant. Can go ahead. We also support stop orders. So we support stop limit orders, and then trailing stop orders as well. Trailing stop orders are pretty cool if you haven't used them before. Basically, it's like if the price of your position or like the value of your position goes down by like X%, then just close it out. So it's a good way to kind of save yourself from liquidation and cut your losses there. But yeah, that's all the stuff that's kind of available on the product right now. This is kind of in an alpha state right now, so we are planning to add a lot more things to it before the public launch. Planning to add basically like a portfolio screen where you can see all your holdings on the platform. You can see like the P&L of all your positions. It'll be really pretty and stuff like that. Obviously, we have just the 3 markets that are here right now: ETH, Bitcoin, and Chainlink. And like I said, planning to add like a ton more in the really near future as well. So that's a high level what we've built. As I mentioned, it's currently live in private alpha. So if you're interested in trying it out for yourself in advance of the public launch, head over to our website, dYdX.exchange, and you can join the waitlist there. And we're letting in a bunch of people over time. We've actually had extremely high level of interest so far, which is really exciting. We had 80,000 people sign up to the waitlist so far. Which is a little bit staggering to me, but a great show of kind of faith and excitement for the new product and people using Layer 2. So that's what we've built so far. And yeah, that's basically it. I guess I'll kind of stop there and kind of open it up for questions. I would love to take any questions that you guys have on dYdX or anything you're curious about, or if there are any other product features that I can demonstrate, just let me know. But yeah, thanks so much for listening to the presentation.
And Antonio, thank you so much. That was a fantastic presentation. We do have some questions, and we are limited on time. So I'm going to go right to the questions from the audience. First question is: any hope of perpetuals being allowed in the U.S. in the future?
Yeah, it's a tough question. So like the question is getting at perpetuals are not available in the U.S. right now. Yeah, to be blunt, probably not anytime soon.
Okay, great. So next question is timing for other products, non-perpetuals, to be included in the L2. What are the timings on these other things?
Yeah, we actually don't have plans to migrate anything else to Layer 2. We're kind of shifting our focus as an entire protocol from some of the like relatively more simple products that we've offered in the past to things like spot trading and margin trading. We don't have plans to migrate them to Layer 2. And we're just focused on perpetuals, and then probably in the future, just other types of synthetic products going forwards.
Right. Okay. And any plans to launch dYdX on top of Algorand or any other L1 protocol?
Yeah, no plans for that right now. I mean, I think the level of scalability that we're getting with Starkware just rolling up to Layer 1 Ethereum is really high, and we're, like I've been talking about, really excited about the product that we've built on top of them. So I think no plans for that right now. Of course, we're not married to Ethereum or like even Starkware forever. And it's something where we always keep an eye on the other exciting things that are being built in the space as well.
Mm-hmm. Okay. Next question is from Alex. Will users be able to trade directly through your smart contracts and implement a custom UI that integrates dYdX?
So not right now, and the reason for that is because we have the order book and matching engine just running in kind of a centralized way right now. So we're what's known as a hybrid exchange, which means we have some centralized components and then some decentralized components. And the centralized components are, of course, the order book and matching engine, and that's where a lot of the performance that I was demoing comes from. But that kind of means that it's a little bit less composable and harder for, like, you can't just go straight to the smart contract to make a performant trade. There basically is a way on the smart contract that you can make like effectively like an emergency trade, like if our servers were censoring you, but that's more just aimed at kind of keeping the protocol non-custodial. So that's the current state of the world right now. One of the things that we're actually going to be focusing on as our big project for the rest of the year is figuring out how to fully decentralize dYdX and kind of no longer have, or at least the plan is to no longer have this hybrid model or these centralized components in a year from now, which I think is pretty ambitious, but definitely doable. So in terms of that, we're basically just looking for ways to, decentralize the liquidity model or decentralize the order book. And then things like what the question asker was asking will definitely be possible.
Okay, we have 3 more questions. I'm going to try to wrap it up from here. Will I be penalized for not being a whale in L2, as in higher fees that I pay in current dYdX for small trades?
Yeah, it's a good question. I would say, so basically to answer your question, we will have a volume weighted fee schedule. So it's kind of similar to what you may have experienced on centralized exchanges, where basically like if you're doing more volume, you get like lower % fees. And that's just really important as an exchange to try to incentivize people to do more volume. That said, kind of our introductory fees are going to be 15 basis points, just a 0.015%. So it's just going to be orders of magnitude lower fees to trade on layer 2 than it would be on our layer 1 product or likely anyone else's layer 1 product where it's like $100 to make a trade.
Okay. Another question from Adam from Mycelium. With the movement to a layer 2 solution, trades are now private and transparency is lost. Is there a risk that the exchange may veer into a realm of centralization as these types of progressions occur?
So the model that we're using with Starkware is what's called a roll-up model. And basically what roll-up means is that the data goes on layer 1 Ethereum for everyone to see and everyone to audit. But specifically the data that goes on Ethereum is not the trades, it's the account balances, importantly. And that means that all the account balances on dYdX are public, are auditable, so everybody can see kind of the health of the system, can see how many long positions there are versus shorts, can see what the balance of the insurance fund is, things like that. So we really don't feel like there's that much being lost in terms of like the trades no longer being public. Maybe you have to trust us a little bit more to like accurately report our trade volume and stuff like that. But beyond that, for things that are actually critical to the health of the system, that's still all transparent, still all kind of coded in our smart contracts and publicly verifiable.
Mm-hmm. Okay, and last question for the evening from Yuna. Who are your market makers, or how are you adding liquidity for trades?
Yeah, who are our market makers? So we have 2 that invested in our last round. So I guess I can talk about them publicly. And that's Wintermute Trading and then SCP. So basically they're like, really legit crypto trading desks that are providing liquidity on the platform. And can't talk like exactly about like who they are publicly, but I will say in terms of the like level and kind of number of market makers that we're getting for the layer 2 product, it's a really big step up from what we had on layer 1. On layer 1, we basically had like a lot more liquidity to be provisioned on the protocol. And not just that, but we're getting some of the really big market making names in this space. They're starting to take like DeFi really seriously. And we've kind of positioned ourselves as dYdX as like a really good stepping stone for a lot of these more professional trading desks to start getting involved with DeFi. Because we do have this order book model, because we do have, the central matching model, We do have APIs that are basically very similar to what programmatic traders are used to from centralized exchanges. So it's really easy for market makers to get spun up on layer 2. And I think we're really leveling up in terms of our market makers and therefore our liquidity there as well.
Okay, I think we are out of time. So I want to thank you, Antonio, for a fantastic presentation. It was very informative. We're going to have to wrap up soon. So any last comments, Antonio? And then we're gonna close this out.
Yeah, well, first of all, thanks so much for having me. Really appreciate it. Really appreciate all the great questions, everyone. And like I said before, if you're interested to either learn more or try out the product, head over to dYdX.exchange and sign up for our alpha waitlist. And then the product will be live to everyone publicly really soon, in just a few weeks.
Great, fantastic. Thank you.